This article is coming from FX Street, Lagarde speech, live video. ECB hikes interest rates by 50 basis points as expected. The ECB has raised its main refinancing operations rate by 50 basis points as expected to 3.5% following its March monetary policy meeting. In its policy statement, elevated level of uncertainty reinforces the importance of data-dependent approach to ECB's policy rate decisions, which will be determined by its assessment of inflation outlook in light of incoming economic and financial data, dynamics of the underlying inflation, and strength of monetary policy transmissions, the ECB noted. This is just all saying that they're going to continue to monitor data that comes out with regards to inflation and employment, etc., and will determine a hold, further increases or declines based on subsequent future data. This article is also coming from FX Street. ECB will deliver several further rate hikes in the upcoming meeting. So various analysts have interpreted the policy meeting minutes and Lagarde's speech, and they think that further hikes are expected, just like in the US. The ECB hiked rates by 50 basis points. Economists at Nordea think the ECB remains worried about inflation picture and will continue hiking in the upcoming meeting. So that's what I was saying. It all depends on future inflation, again, employment data. The ECB hiked rates by 50 basis points despite ongoing market turbulence. So you had the current crisis happening in Europe, the Credit Suisse bank potentially folding. It's put a lot of pressure on the entire Euro Union. So that's what they mean by, market turbulence. The uncertainty market situation led to the ECB not giving any signal about the future. The central bank is finally truly in a data-dependent mode. So that's what I was saying. The data is going to drive what the ECB does in the future. However, this particular analyst thinks that they will continue to increase rates, favoring 25 basis point steps moving forward. With all that said, let's just go straight to the charts, and this is the euro. And you can see that it is hovering above the 13 simple monthly moving average. This should serve as support. So we had the lows back in September. We call this monthly suppliers. And these wicks signify selling pressure. But I love this area right here, just above it. So if these wicks signify selling pressure, there's definitely sellers up in this area here. Okay, so let's just mark it. Monthly sellers. That should go up there. Monthly sellers, and this is monthly buyers. Alright, let's go down to the weekly chart. You have this huge weekly inverted hammer candle. So that's going to serve as some resistance. We'll say at the 110. We have huge volume in this candle right here. Huge volume in last week's candle. I like this area down here as a level to go along. It's kind of like a flip zone. You have sellers, the level where there were buyers and sellers. Flip the zone from resistance to support now. You also have this low pivot low. So if you wanted to do so we're going to mark this in red. And we'll just say that's 103. Weekly buyers at the 103, 100. The most recent lows are serving as support. So you have two weekly, at the moment, indecision candles. Price needs to get above the 108.2 level in order to see more upward price action. Let's go down to the daily. So today we have an indecision candle. Oh, this is the weekly. Let's go down to the daily. Yesterday's candle was the sell-off on the Credit Suisse potential news of going bankrupt, but the Swiss National Bank bailed them out, as expected. That bank is too big to fail. Alright. So price is kind of stuck in between support and sellers at the 108. I want to look at this wick over wick a little bit more on the 4-hour chart. Let's do pink. Let's go down to the 4-hour chart. Although we had a large volume selling, I'm not in love with the zone just due to the structure. I do like this upper zone here though on the 4-hour chart. So we're going to say there are sellers up in this area here. Had a rallying price base and then a drop, base and then a huge drop down. Alright, so I'm going to go back up to the daily. And I'm going to mark this as 4-hour sellers. So yeah, so price is range bound, excuse me, between the 108 and the support down at 105.3. You could either play for a potential bounce. However, I would prefer to long if price came down to the weekly buyer zone at 103. If price breaks the most recent highs, you can look for a pullback to take it up to the zone where there are 4-hour sellers. I'm just going to pull back to the weekly. So these are day trading opportunities. If you're playing the monthly or weekly zones, those will be more swing and or position trades. Thanks for watching, subscribe, and please like the video.